Morning everyone, a little bit of an unprecedented video on a Sunday because I wanted to get this information out just before the Monday comes. I've been avoiding talking about coronavirus because it just seems like a mental thing that people are just going crazy about. But I did stumble on some history of some viruses and how they've affected the market. So I just want to go through that with you because if you're a good little dividend investor, then you're going to be looking for the lowest place to buy some stock. I had a look out there and I found three graphs that I found very interesting. They all are about the S&P 500. I tried to make my own about the FTSE 100 and I tried to find some information about the FTSE 100. But I promise you the dips were pretty much the same. There are three recent pandemic scares, Ebola, swine flu and SARS. Each one of them had their own effect on the market, but they all had a couple of things in common, which we may be able to apply to this coronavirus. These graphs are really good because they show the market pre-virus and post-virus. Pre-virus is in the red and green is the post-virus. During swine flu, the market saw a 5.5% drop. It lasted about 6 days and then it recovered, all within a month. Ebola actually saw a rise when it was first announced, but then it had a big drop of about 10%. Again, it lasted about 5 to 6 days and then in a month it had fully recovered. And the last one is SARS. SARS is a very similar disease to this, but it had a slightly different effect. The SARS virus dropped the market about 8%. It started in the middle of January and continued to bottom out all the way into mid-March. The same thing happened though. It all recovered within a month. What you need to take away from this is everything recovers within a month. These viruses don't have long-term lasting effects on the market. The question is, will this coronavirus be worse and will it last longer? The general answer to this is no one knows, but there are a few key factors that we can look at to see if we can predict if this is going to go on a little bit longer. The spread of the coronavirus is much bigger than any of the others. However, there's a lot less death involved in this one. It really isn't as lethal as you think it is. The main factor right now is that it's hitting a much bigger market. It's hitting China right in the balls. That's having a greater effect on us and could mean it's going to last a little bit longer. With this in mind, I still think it hasn't quite reached the bottom yet. I'm personally not going to look at anything until the end of Monday evening. If we've seen a considerable change at that point, I'll start putting money in. But my personal situation means I need to hold out a little bit longer. So I might just be creating this video just to justify it to myself. Regardless, there's a real buying opportunity here, whether you've bought in the past few days or you're going to buy in the next few days. But remember, history shows that it's going to recover within a month. We have about a 6 to 10 day window to really put some money in and start making gains on this. There you go, that's my take on the coronavirus. I hope everyone's going to start investing more, and if you're smart, you're not going to take your money out and invest it into safe havens. You're going to keep going, keep buying, and you'll be reaping the rewards within a month.